On today's episode, we are going to take a look at ways to find growth stocks. As you all might know, growth stocks are those that are growing in earnings, revenue above the overall market. And usually these companies, if you have them in your portfolio and they continue to grow, they are going to show amazing returns and can take your portfolio to do better than the overall market. So on today's episode, I am going to show actual ways. We're gonna do a live presentation of how I find growth companies, and then what kind of screeners I do, or how do I end up finally deciding if I should invest in that business or not. And right here, if you guys are looking at my screen, I have my top 5 performers in my overall portfolio. So we can see my top 5 winners are Spotify, Fastly, PDD, Activision, and CRNC. Out of these 5, 4 of them are strong growth companies. I would say Spotify, Fastly, PDD, and CRNC are considered true growth stocks. Activision, on the other hand, I'm very bullish in the market they're in, but Activision as a business itself is not growing at the type of pace that these other 4 are growing. And we can see, right, Spotify has given me 78%. Fastly has given me 121% return. PDD has given me 130% return. CRNC has given me 95.62 return. And these are all companies that I have averaged in. So the actual return from initial investments has probably been higher. So like I mentioned, today I'm gonna talk about how I end up finding these companies and the type of screener, so the type of process I go through finally deciding what to invest in. And if you are new to the channel, don't forget to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much, and I truly appreciate the support. And if you guys ever want to get in contact with me, feel free to post on the comments. I'm also very active on Twitter and on Discord. I have a Discord channel which is free to anybody that wants to join. I'm not charging you guys for anything, but at the same time, I am not a professional. Everything I give here is not advice, it's just my opinion. And also, guys, in the comments below, share some of the growth stocks that you guys might have or might be interested in looking at. The more eyes inside the community trying to find future growth stocks can help out other investors. So let me know in the comments below some of the growth stocks you guys are finding. All right, so first I'm gonna describe the methods I use to find a future growth stock. But after then, I'm gonna go pretty in depth in each of these points and actually do a quick step so you guys can actually see how I do it, not just me saying, hey, I do this. I'm gonna show the actual method that I do. Unfortunately, some of the methods or some of the products I use are paid services. So I did go out, I took some time to try to find free services for those that don't want to pay for those services, which is completely understandable. But obviously I'm using a paid service, so I want to show those methods. I'm not going to be promoting any channel, right? I use them because I find them useful. But again, I'm going to show free to use methods if you guys want to go and use those methods again. So the first step is always for me is first find a market that I am bullish on and understand. The second method is after I find a market or the type of sector I'm bullish on, I use screeners to find potential businesses. And then in those screeners, I pick selective metrics that I want to take a look at. And after I find potential businesses, I then go, this is the hard part, I then start looking at their financials. So like I said, that's it, right? Those are the things I do. But now I'm going to show you guys the actual stuff that I look for. So for example, find a market that I am bullish on and I understand. If you guys have been watching my channel, you guys know I'm very bullish in certain markets. Esports is one of them. I'm very bullish in esports. I am very bullish in the cloud market, in all different types of markets within the cloud, right? People just hear cloud and think cloud is just one market, but within cloud, there's tons and tons of markets. So I'm pretty bullish in cloud servers, in technology components that deal with those cloud servers, with software companies, with consumer products that I understand. The first thing is if you see my portfolio, which I have it, I'm pretty sure I've talked about it. There's my previous videos earlier this week. I pretty much showed my whole portfolio, but I also have it on my Discord channel for those that want to see. All the businesses that I have there are ones that I understand what they do and I understand their market. You're never gonna find me investing in a company that I do not know what they do. So for example, I'm an electrical engineer, so most of my companies are gonna be tech, are gonna be software based, are gonna be consumer products that I understand, semiconductors, opposed to me investing in health or any form of biomedical devices, just because I don't have that form of knowledge to help me understand that type of market and where that market is headed to. All right, so now that we found the market, for this video, let's just use software as that market. Then I start to use screeners to find potential businesses. And like I said, I normally use a paid service, and that's Simply Wall Street. And I'll just show you guys that platform right now. So here in Simply Wall Street, I first go to Discover. They already have a forecast high growth. So this is a screener that is for companies that analysts expect to have high earnings, revenue, or cash flow growth in the next 3 years. So once I click that, then here I can even break it down. I can edit the screener. I can edit based on industry. And they have it as simple as software based. Let's keep scrolling down to software based. Software here. I just check off all the software, and then my screener gets updated. All right, so now after I start finding the potential businesses, I just start taking a quick look at them. There's one that I actually did yesterday, and this is how I found it. So the company is ShotSpotter. So I'm like, okay, ShotSpotter. So now that I understand that this is a potential grower, now I want to understand what they do. So the best thing to do is just go to Google and type the website and go to their website and find out what they do and try to see if you can understand it. And I actually did a video on this company yesterday, but like I said, on their website, you can find what they do pretty easily. And if you don't understand, then for example, if I don't understand what they do, I continue to move forward. But ShotSpotter was one I understood. They pretty much put their customers are cities, states, and countries. So what they do is, let's say the city of Chicago wants to understand more about their gun violence. They hire ShotSpotter. ShotSpotter goes and puts sensors, acoustic sensors, in different locations, in different places, in light posts, on top of city roofs, on top of city buildings. And then if a gunshot goes off, thanks to all the sensors around the city, it's able to triangulate the actual position of the gunshot, and then after that it alerts the agencies. So this is it's a pretty simple business to understand, and we can see the potential growth in here. Right now they're only working with cities, but they have the potential to work with college campuses. They have potential to go international and work with outside countries with high crime rate, high gun violence. So one, I understand the business, all right? And that, like I said, that was the screener part. And that was all thanks to Simply Wall Street. Now, this is the free to use service. I like I said, I use Simply Wall Street, but if I did not have that service, I would use this one, which is free to use. And here you can go to finviz.com. Finviz.com is also another pretty cool website that I use. This one's free because you can actually see, I use it to take a look at futures, at how the market is doing outside of market hours. They also have a map which kind of show you the overall performance throughout the day, throughout the week, of how which sectors have done bad, which sectors have done good, 3-month performance. So overall, Finviz is a pretty cool website. And if you guys are not using them, it's a very, very well free to use platform. All right, so here let's take a look at their screener. They have a screener here. So here in the screener, you can select certain things and then actually save that screener. So when we're looking at high potential growth, they actually already have certain sectors that you can take a look at. So I'm actually just gonna do it with you guys here. So I went to finviz.com, I go to screener, then there's a selection that goes order. So order, you can pick what type of companies you're looking for. Growth companies are those that are expected to grow their earnings per share in the next 5 years, right? I don't really care how the past has gone. I'm more worried about how the future is going to go. So they actually have a selection for earnings per share growth within the next 5 years. And let me actually zoom in a bit for you guys. I can't zoom in too much because then we won't see everything. All right, so now it gave me about 376 pages, each page up to 20 companies. So that's over 6,000 companies. So now I have to break this down even more. Like I said, find an industry that you're willing to look into. I wanted to take a look at software. So here in the sector, we can break it down to technology. Now that broke down into 30 pages instead, so a total of 600 companies. Now I can even break that down within industry. In the industry, I can put software applications. So now software applications, that's even better then. Now other things I can take a look at. Maybe some people only want to invest in a company that's inside the United States, a sector, a country, USA. All right, so now I brought it down to 131. So I started with over 7,000 companies. Now I'm down to 131 just based on sector, on industry, and country. But that's not it. I also want to do, we take a look at their fundamentals. So now if we take a look at their fundamentals, I want to take a look at forward PE ratio. So forward PE ratio, if you guys know what price to earnings ratio is, the total price divided by the earnings, the total share price divided by the total earnings per share. The forward PE ratio is the PE ratio in the future. So I just want to make sure that in the future, this company is expected to be profitable. So over here, they have a sector where the forward PE ratio for a company to be profitable, it just needs to be higher than 0. So now we put that in the fundamentals. So now that 130 got broken down to 85. All right, so now within those 85s, what else can we take a look at? I want to take a look at the earnings. Maybe let's take a look here. All right, so the next thing right here, like I said, you guys can take a different look at all their things, but sales growth quarter over quarter. So I want to make sure that this is a growing company, that is growing at strong levels. So I want this to be positive, at least greater than 0. So now I brought it down to 66. Now, earnings per share growth this year, I want that to actually, again, be 0. I want this company to continue to grow, to be growing within the next 5 years, but to also be growing next year. So now I actually broke down that 6,000 different companies to now only 38. And now let's actually, if we take a look here, we're looking at their overview, but if we take a look at valuation, we can see earnings per shares, how they can give it to us in earnings per share within the next 5 years. All right, so now it's showing me the top leader in earnings per share for the next 5 years, and that's actually gonna be Autodesk based on the expectations. But here, these are companies that I have actually done videos in the past week. So Autodesk is one. I did take a look at apps. So apps is number 7 based on these metrics, right? And you can go a little deeper in the metrics. You can probably get a little tighter to even find even better companies for you. So apps is one that I was taking a look at, and let's try to see if SSTI is actually in this list, the company that we were just looking at. And actually, yes, here it is, number 34, SSTI is expected to grow earnings per share this year, expected to grow earnings per share next year, and it's expected to grow just in the overall market. So again, now we found ways to find out potential companies. So right here you can, Cloudera's there. That's another company I took a look at before. So now we have a free method to find a list of potential companies. And like I said, 38 companies it's not that hard to do. Especially right now, the only thing you have to do, the only thing I would do is just go to their company's website, Autodesk website, and try to find out what they do. And if I like what they do, then they continue to the next step, right? It's only been like not even 5 minutes. That did not take me 5 minutes to find 38 companies. Now to just take a look at what they do, Autodesk, right? Just go to Autodesk.com or Autodesk Inc. and find out what they do. Obviously, I know what Autodesk does. They're the 3D design website. But again, you continue to go through this list and start to take off the companies you don't like or you don't understand. And to be honest, this is something I honestly wished I would have found online when I started to learn to invest. I've actually been investing for about 7 years, and I'm hoping you guys are learning some stuff from me, and I'm hoping I'm providing value to you guys, because I do. For me, if I was to watch a video like this, I think it would have helped me so much throughout my investment process. All right, so now we already did the two things. The first two things. First, try to find a market you are bullish on and understand. Second, use screeners to find potential business. So we actually ended up doing that. And then within these, there's also extra ways to do it. And as you become more familiar with the overall investing community, you start to find more people that are like-minded like you. For example, that's the main reason I created my Discord channel, right? I'm nowhere near a perfect investor. I would say I'm an okay investor. But now I have so many people in that Discord channel just sharing information, and a lot of people, the more eyes, the better. Some member in there would tell me, hey Jose, try to check out this company, I heard is pretty good. If it wasn't for them, I would not have heard of some of these companies. So there's always, if you find yourself and start to join communities that are with like-minded individuals, it helps you find more potential growth businesses. The second, and again, continuing with that overall growing the community, Twitter I have found to be a very, very strong way to also try to learn from other investors. If you take a look at my Twitter, I'm following about 100 people. All of those people are either investors or people that I find useful from the information that they post about investing. I am continually learning, and I have found Twitter to be a very, very strong platform for me to continue to do that. Of course, I'm not there following nonsense, right? I'm not following things that are going to distract me. I'm using Twitter to continue to develop my overall market education and understand what other investors are doing. But just because other investors are doing it, it doesn't mean I'm going to follow them. I think when you look at other investors, you need to come with an open mind. You need to understand why they're doing certain things, and then you need to understand within yourself why you would do that thing or why you wouldn't do that thing, right? You need to come with an open mind and try to learn why they're doing a certain thing, not just what they're doing, but why they're doing it. And I feel like that has helped me out a lot, especially with this growth investment, with my growth investment portfolio. All right, so my final thing is what I look for in financials. So one, now we found a market that we're liking. Two, we found a few companies that have met the screener, and I understand what they do. So now let me bring up their financials real quick and try to see if I want to go any further in there. All right, so next I start looking at their financials, and first I'm gonna show about the platform I use, just because this is the actual method I do. So I just want to be as transparent as I can. And I use lazyfa.com, which is another paid service. This one is pretty cheap. I'm pretty sure that there's a subscription here that's $7 a month and can do everything that I do. Again, LazyFA is not a paid sponsor, but I use them on a daily basis. If you guys have been watching my videos, this is my go-to. After this, I'm gonna show a free to use method. Obviously, the free to use method is free to use because you have to be a little more manual to it, right? You guys saw how easy it was for me to find it via Simply Wall Street, but then using Finviz, it wasn't as bad, but obviously it takes a little bit more time. So now here I'm taking a look at SSTI, which was that ShotSpotter, that company we took a look at that we found in our screener. So the first thing I take a look at is past annual revenue growth. Is this company expected to grow revenue only in the future? How has it done in the past? So here we take a look at ShotSpotter. In the last year, it grew 17%. In the year before that, it grew 46%. And the year before that, it grew 53%. So to me, that's pretty good news that this company is continuing to grow at very strong levels. Next, I take a look at margins, and margins, this one is a bit tricky. So when we take a look at margins, we take a look at two margins, gross margins and profit margins. Normally with a growth business, they tend to have negative profit margins at first, because right now they're really just focused on building more customers, collecting more customers, so then they can just build the overall market. And once they have this umbrella full of customers, they start building up that profit margin. And I think that's the smart way, and that's how businesses should grow. So the first thing I noticed is make sure that there is an uptrend in profit margins and there is an uptrend in gross margins. So profit margins, for example, in this company is now positive at 4.4%. But in 2018, it was actually negative. And in 2017, it was even more negative. Is more negative the proper way to say it? It was losing more money. So, and overall gross margin as well. Gross margins in 2019 were 59.7. 2 years ago in 2017, it was 48.8. So we're seeing a growth in both gross margins and profit margins. So I'm already liking this company. I like what they do. I like their revenue growth. I am liking that they are improving their gross margins and their profit margins. The final financial I really try to look at before going any more in depth is the balance sheet. We saw that these are growth businesses. So like we saw, growth businesses most of the time have either are making no money for the year. So for you to not be making any money in the year, you need to make sure you have money in the bank, and you need to make sure you don't have a lot of debt. So I take a look at their balance sheet. So by taking a look at their balance sheet, I can see here this company has no long-term debt and no non-current debt, and it has about $25 million in cash, which it shows that this company doesn't have to worry about its future anytime soon, because it has no debt to pay and it has a nice portion of cash within it in the bank to make sure to continue its overall operations. So now we found a business that looks really good, and now again we continue to go down the list and try to break it down even more. All right, so now we were using Lazy FA, but let's try to find this information based on a free to use platform. I think a lot of people use Yahoo Finance. That's one of the major ones. So if we take a look at Yahoo Finance, let's take a look at SSTI, which is the one we've been looking at. And here they should have financials. So here on financials, you can see total revenue. So it breaks down total revenue for you. You guys can see, first of all, total revenue is growing at a fast rate. Then you can take a look at basic earnings per share. Again, another thing, you can see that basic earnings per share are getting better every year. We can also take a look at gross profit. Gross profits are also getting better. So again, it's a little bit harder to take a look at, because here you have to do percentage growth to really see the type of percentage level that you're growing. But at least it's easy way to find it. I'm not sure if you're actually able to extract it from here. Maybe, can you? Not sure, but if you are able to extract it, that would actually make it even easier. Another one that I end up actually using is seekingalpha.com. Seekingalpha.com, again, free to use. You can put in the ticker SSTI, then you take a look at their financials, and here on their financials, it shows you everything else. And here actually you could extract it onto an Excel. And nope, you need to have a paid membership to do that. But still, you can see revenue growth, the type of revenue this company has seen in the past years. You can see their growth. Maybe you can even find their margins here to see if they have been growing. But again, there are plenty of free to use platforms as well. It just takes a bit longer. All right, so that's actually it for this episode. I hope there was some value to it. Like I said, the three methods that I do, the 3 steps are: first, find a market that you are bullish on and that you understand. There's no point for me, I find no point investing in a market that I have no knowledge based upon. And the second, use screeners to find potential business. So like I said, we took a look at them, and I showed some of the metrics I would look at and some of the companies I would find. I also talked about those extra ways that one can find those potential growers. Finally, I showed a quick easy of what are the quick financials that I look. I look at past revenue growth. I look at margin growth, at how it's growing throughout the years, and finally I take a quick look at the balance sheet. Like I said, right here, we did it all live. It took me less than, I want to say, 15 minutes to find a potential business. Now after this, I can go, I check it off my list, and then I take another few hours and actually do more in-depth analysis on the company. Take a look at ownership, take a look at past earnings, take a look at their 10Q report, their earnings call. Try to find a little more information there. The easy part is finding those companies. The part that I wouldn't consider the rest the harder part, but the one that takes the most time is doing a little more in depth on them. But like I said, this helps us break down the amount of potential businesses that we can invest in. We started off with about 7,000 businesses, and we broke it down to 38, and then within those 38 we break it down even more based on just the type of market that they're in. So take care, guys, have a good night, and see you next time.